gold had made a nice run all year quietly, but it saw outflows. Some weeks it had inflows, but it was basically wrestling with net zero all year in cumulative flows. But it's finally starting to get into the positive. It's a little over $1 billion now in flows, so it's finally getting rewarded for its big kick. We have a note out last week about how the shiny metal has become a shiny object. And if you become a shiny object in the ETF space, you will get some looks, trust me. People are like, oh, what's that up there? You know? So, and if you look, it's beating the S&P. It and Bitcoin are in somewhat of a, fight for dominance between those two store of values. And I will say Bitcoin and the ETFs that launched may have stolen some of the thunder that would have otherwise gone to gold this year, because they basically have taken in $21 billion. If that didn't happen, let's say Gensler denied them and there was only gold, I would guess gold would have $10 billion. I think a lot of this is the Bitcoin competition now for that store of value allocation, which is real. So anyway, gold's still doing its thing. And obviously, this is a year where everything's up. And I just want to say that for people who buy gold, remember it's zero correlated, which means that it may or may not go up if stocks go down. And so this year, stocks are up big, gold's up big. That wasn't supposed to happen. So when people think it's a hedge, it's not, because a hedge wouldn't go up in a year like this. So sometimes with gold, you get like extra bonus. It's up when stocks are, but it can also go down with stocks.
Let's stick with Bitcoin if we could, because that hit a huge number. It was like 70,000 today, and I guess it's true believers say that it is like gold is store of value. I think when we last spoke about this, it wasn't too long after the debut of those Bitcoin spot ETFs. How is all of that shaken out? And I know that there was this kind of degree of competition between each of these. Which ETF is going to be most cost effective for those who are investing in them. Are we starting to see that kind of pool of 12, 13 ETFs winnowing now that we're a few months out?
Yeah, I really think there's like 11. There's two new ones that do covered call and this one that came late, but largely there's about a dozen. The ones that came out on January 11th, there was 9 of those, plus GBTC. And those 10 collectively, let's just remove GBTC, those 9 newborns that were born on January 11th, they have $66 billion now in total assets. So that's a lot. That's about 55% of the way to what gold ETFs have. They've taken in $22 billion in flows, as I said earlier. Gold, it took gold 4.5 years to reach $22 billion in cumulative flows. So to do that in 10 months is pretty good. So I think with Bitcoin ETFs, what it did was, just like gold, something that's very full of friction and cost. When you ETFize that,
That's the verb.
Yeah, you are gonna see some takers, because it's just you click a button and boom, you got your Bitcoin on. And by the way, it's regulated. It's with BlackRock or Fidelity or one of the other firms. It's stored with a custodian. So there's that sort of trust factor. It's ETFs are, as I say, SBF proof. So you've got the safety plus the low cost plus the liquidity. It's no doubt they're a hit. And they've survived some downturns better than I thought. It went down like 25% a couple months back, only like 3% of the assets left. So when you have these downturns and you have most people hang in there, it's really helpful, because then when the upturns happen, you can start regaining new highs in your net flows, which they're doing. So even the worst one of the group, the wisdom tree, which I call like the last horse in that Kentucky Derby from January 11th, has 257 million. So if you launched an ETF, let's say it was the Paul ETF, and you launched it in January, if you had 257 million in by now, you would be bowled over. You'd be like, wow, we have a hit on our hands. And that's the least of the bunch.